laptop, which your phone and laptop, which you already have. The second one is you need to be able to access TradingView. Okay. So TradingView, to access TradingView, you can go to your browser. Okay. So normal browser, internet browser, let's say Chrome, and type TradingView. So Mary and Esther too should can look at it. You type TradingView. Then so you see TradingView here. You click on TradingView like this, and you see this kind of page. Yes, you can look for where you can sign in, which is at the right top corner here. You can click to sign in. If you look at my own, I have signed in. Okay, so you can sign in to TradingView. Okay, you can also purchase this one. They are saying try 30-day free trial. Okay, so you can every month. So these are the packages that they have, and every package comes with the, I mean, the features and how the improved version of the tools, extra tools, and what you can use. But you don't need to purchase it right now. That you are starting. You can use the free version to get started, and then later you can consider maybe purchasing it or something. So to get a free version, you can just click product here and then click on super chat. Okay. So trading view product, and then click super chat, just like this. Can you see that? Yeah. So you do this on laptop, connect it to internet, and then do this. So that's how you can get the trading view. And then when you get the trading view, you can so at the left top here, this is the easiest one that I can teach you. We can have a specific class learning about trading view and how to analyze. This class is not about that though. But you can come to the search, symbol search, and then type any pair you want to find any asset. So let's say this one is US 30. So I want to look for gold, one of the famous ones. So XAU USD or gold. So you can type it XAU USSD. So you see I have gold here. Gold versus US dollar. All of them are the same. You just click one, and this is the chart for gold that opens for you. So there are different at the top left here, there are different time frames. This is on the 15 minutes. You can select any time frame for you to have a clear view. The bigger the time frame, the clearer the view that you might have on gold. So this is the way my chart looks like. This is 4-hour chart that I drew. So I did some marking here. I have the highest point or the all-time high marked, and then the current low on gold that I have also marked. And it is inside this range that for the past few months, like 3, 4, 5 months, gold has been moving. So two things is either gold will break down here or will keep moving up, break above this all-time high, and then probably go up or push back, push back again into the range. So this is a 4-hour chart. So this is just what I am looking at. I'm monitoring on gold. Um, yeah, let's go back to so and the third thing is you should have MT5 installed. Okay, MT5 installed. So get to your phone, and then um there's someone's mic is on. Can you please? Okay, good. If you want to talk, you can open and talk, but if not, kindly mute it. Yeah, so MT5. So you can use you can install MT5 or MT4. That those are the famous platforms that we use to trade. So MT5, go to your phone, type MetaTrader. MT is MetaTrader 5, and then download it. Um, and then from there, so now you know you have internet, you have laptop or phone, you know you need MetaTrader 5 to be installed. Then you get to what I'm about to show you today. So you need a broker. You need a broker. So one of the famous brokers, I don't recommend brokers, but I will not recommend, but I use XNET to trade. I use Deriv, and yeah, those are the two most famous ones that I've used before, or I'm using. So how to create and set up XNET. Um, so one, you have to visit um, the XNet website. This is a regulated broker, and it's been in the game for a long time. And this is just an example that I'm showing. Okay, so you visit their site, and then you sign up, just like on any other platform. How you sign up, you just sign up to XNet. So XNET is a broker offering online trading in currencies, crypto, stocks, and more. And what you need to sign up with XNET is a valid email, phone number, ID, verification, which means you need your driver's license or national identity card or passport, a traveling passport, and you need an internet connection. So you can sign up for XNET on your phone or on your laptop or computer. But you need an email, you need a phone number, you need identity card. If you don't have ID, you will not be able to get verified. And you might need I think they might capture your real face, like your face for the verification also. So these are the things you need so that you can create XNES. So the first step will be, you see this link, www.xnest.com. Click open. Just tap on it, click open. When you open, you see this. Yeah. So you open this link, and then you're going to fill your basic details to register. Okay. So you um put in your details. So it's basically you following the what is required, what is being requested to fill out. And then inside, after creating the account, inside, when you log in, you're going to see your personal area or dashboard. And then it will look like something like this. So this is where you manage your deposit withdrawals and trading platform. Trading. And then the next step will be you make sure you verify your account even before you make any deposit. So verify your email and phone number, upload your ID card and proof of address. So for the proof of address, most times um, we will use for those of us in Africa or from Africa, because we don't have ID cards that has address on them. like address on them. We use bank statement, utility receipts that has address, and it should be the address where you live. Okay. So, and the address you put in when you are you're registering, that same address should be on your document. So, if it's a bank statement you are using, because the most famous one is bank statement. So, you have to go to the bank and request to print your statement. Or if you have an online way of generating your bank statement, you generate it. Then, but make sure there is um, an email address on it. Sorry, make sure there is residential address on it. And then the same address on the bank statement should be the same address you input whilst registering. In that way, the verification is going to be easy. Then you choose the account type. Now that you've created your account and gone through verification, even before you do the verification, you can choose the account type. So mostly you choose the standard account. That's what you would choose. And then um, you set up the trading platform. So you are going to use the logins that will be given to you by Xness after creating your standard account, and then go to MT5. So see, this is the picture here. This is the way MT5 looks like. So you go to MT5 and then log in on MT5. Okay, the XNES login details is what you use to log in on MT5. And that is where you do the trading. So you manage your account, your withdrawals, deposits, and everything on XNES account or site, but you do the trading itself on your MT5 as you've logged in. Then you fund your account. So you can choose mobile money, card payment, crypto, any deposit option that you want to deposit. Okay. After your deposit, then you can trade. Basically, or mostly $10 minimum will be okay. But for a beginner like you can start, or you have to really start with demo. So you create a demo account. Inside the XNet side, there is real account and there is demo account. So you can have a demo account to start trading. Uh, so like I said, start with the demo account. Make sure you get the training, what we are doing, and then manage risk carefully. All the brokers, whether you're going to use XNet or Deriv or any other broker, they will let you sign a disclaimer, or they will let you read that you are risking your money. So any money you are depositing, your money is safe with a regulated broker. But any money you are putting in, you should be aware that you can lose all the money. So that is it. Um, yeah, just be careful of scammers and all that, and contact support. Only the support when you need any help. Okay, good. So that is just a quick walkthrough of how you can create a broker account for, and the example is Exness. Um, do you have any question? Do you have any question before we move to um, lesson two? Any question before we move to lesson two? Okay, okay, good. So let's quickly move on to uh, lesson 4. And lesson 5, or the last section, basically is going to be for um, putting together a very structured way and very quick way to find a trade setup in a simple way. And then we can go to the real chart and find an example. So we have under 10 minutes to end this session, and then we are going to start with the next session. So let's see if we can go quick with this one. And then in the next session, we will go to the chart and then um, look at real setups. Okay. So good. So for this lesson, we are looking at candlestick basis for us. So the first thing is that yeah, so we're going to look at what candlestick is and some examples, or some of the most important ones that we see on the chart. There are a lot. So we have the engulfing, the doji, the morning star, evening star, hammer, shooting star, and how they combine, or the pattern. So, so in the 18th century, by this Japanese trader in the past, very long time ago, um, he used them to track price movements and then trader emotions. So he really developed the candlesticks patterns. And then as time went on, the method was refined in the 1990s. So candlesticks represent price action during specific time frame. And each candlestick has an open, a close, and a high, and a low. And it has a body. So this is what the important thing that you should know is there is a high, there is a close, there is an open, and there is a low, and there is a body. So for example, what we have on the screen here, if you look at the green one, so the green is bullish candlestick and the red is bearish candlestick. The bullish means bulls, buyers, okay? Momentum, up, what? Up. We're going up. Bearish means bears, okay? Moving down. Sells, sells, sells. Good. So if you look at this, you can see that on this candle, and this candle can be a 1 minute candle or 5 minute, daily, weekly, okay? The top is the high for the bullish candle. And then the close for the bullish candle is always at the top. A bullish candle closes up, and then but it opens down, and then it makes a low also down. For the bearish, it opens up and could make a high and then will close down. So that's the most important thing that you should remember. So number one, when you see bullish engulfing occur, when a small, you see a bullish candle occur, a bullish engulfing occur when a small red candle is followed by a large green candle. This indicates a very high likelihood of a reversal. Okay, so when there is a red candle that opens, made a high or might not have any high, and closes, made a low or not, and then you see a bullish candle also opens, probably made a low, could also not make a low, but moves move and closes above the open of the preceding bearish candle. then we can call these two patterns that forms together or candlesticks that form together, we can call them as, or we can call it as a bullish engulfing. Okay, so the length of the bullish candle engulfs the previous red candle. That's what I said. So this is for bullish engulfing, and we see this on the chart a lot. So we have to, our role is to know them and learn to recognize them. That's all. The bearish engulfing is the opposite. And in this situation, you see a green candle and a bearish candle moves to engulf the open or closes below the open of the bullish candle. Okay. Then we have doji. So doji normally signals indecision or a potential reversal. It could also signal continuation, but there are different types of dojis. So we have a doji that has a little body or no body, or where the indecision happens below. And we have long, that is called a gravestone doji. And then we have long-legged doji, which the indecision happens in the middle. And we have the dragonfly doji, where the indecision happens in the upside. So these are the three types of dojis that you should learn to recognize. Okay. It signals indecision, as I've said, and there could be a potential reversal, meaning that buyers don't know what to do and sellers don't know what to do. So once you see that, it can signal you something and you can make decisions. But notice we use candlestick patterns in combination with other um, concepts. So the doji forms when the open and close prices are nearly equal. Then we have the morning star. The morning star um, is a three candle bullish reversal pattern. So when there is a bearish situation and the last bearish candle that makes a low. So this is kind of a swing low. Okay, the last bearish candle makes a low. Then we have a small bullish candle that makes a lower low, and then another bullish candle that makes a lower high. This three pattern is what we call the morning star candlestick, and it signals a strong reversal. When market has been trending to the downside, this can show you that market is about to move to the upside. Um, yeah. So we have large red candle, small bodied candle, and then we have the large green candle. Yeah. So when you see this, this is the morning star candlestick. Then the evening star is just like the reverse of the morning star. That happens when there is an uptrend and then market is about to reverse to the downtrend. So it's the same concept. Then we have the hammer. So the hammer, look the way like hammer looks when the carpenters, okay, they use the hammer. So in a bearish situation, there is a bearish candle and price moves down, and then so it's like the sellers are pushing price to the downside and the buyers pushes it up and it closes up looking like a hammer. Then this can, I mean, the next bullish candle is likely, once it's likely moves up, this can signal a strong reversal also. Shift from a bearish market to a bullish market. So let's just learn how to recognize this. Then the shooting star. So a bearish candle pattern indicating potential reversal formed by a long upper shadow and a small real body. So we have a long upper, which means market moved to the upside and then sellers pushed it to the downside, but it closed below. Okay. closed below. Very strong. Yeah, so to trade these patterns, we have to seek confirmations before we enter trades. We have to also check for support resistances around where these patterns are being formed, and we have to combine this with the volume analysis. And we have to always set stop losses around or below these patterns.